co-lead portfolio manager of the Osterweis Growth and Income Fund, Microsoft, the top holding within that fund. Larry, it's good to see you. What do you make of what's happened to these names, especially Microsoft, which, as we said, is your largest holding?
Yeah, it's actually our second largest. Google's our largest, but boy, they're pretty close. So you're in the ballpark there, Scott.
Yeah, pain all the way around, Larry, sorry to say.
Yeah, they're pretty much acting the same these days. The thing, obviously, Microsoft started off, in all the tech names, it started off with a lot of multiple compression, the stagflation story throughout the economy with rising rates. And we would also argue, driven both by interest rates and risk premiums going up. It's been a real headwind to the sector. And frankly, in retrospect, those names probably got ahead of themselves from a stock price perspective anyways. But the thing we really emphasize when we think about why these are such big holdings for us is the business durability, both on the revenue side and on the earnings side. And what we're seeing in the market today, and Target's a really good example, there are names out there that just don't have as much business durability to them. You can't bank on the earnings quite as much. As great a company as Target is. So this is why Microsoft's a core position for us. As your segment just touched on, the cloud is going to continue to grow at a great rate. They have pricing increases coming. And this is the big point. When you think about these cloud providers, you have to just do the math that they will continue to grow at 20 or 30% for a sustainable period of time. In our view, up to 10 years. And cloud is still only 20% of data center computing. So you're talking about these businesses that over 10 years could be 10 times larger than they are today. That is a really big factor that investors need to think about when they're selling these stocks.
My friend Joe Terranova, you may know from the halftime report, sent me a really interesting story that I think plays into this conversation well. And I want your take on it. It's about the $10 billion MTUM momentum ETF that is facing its semi-annual rebalance. And a stock like Microsoft, for example, is one of those cited in this story that's coming out, and value names and energy names are going in. And it just makes me wonder what the run-on effect of that is for stocks like Microsoft, Alphabet, and some of those other what have been momentum names are shunned from large ETFs, and what the impact is. Can you think about that at all?
Well, we do think. I mean, I haven't thought about this momentum ETF so much, but one thing we do think about a lot, and it is a risk with these names, is the weighting they have in the S&P 500 and any number of passive ETFs. And then this is a good example of a rebalancing in a very, sizable ETF that's, has a specific purpose being momentum based. Part of me wonders if this is a contrarian signal. I would love to go back and know when these names were added to this ETF. So that's one thing that sort of pops in my mind thinking about this. But if you're an active investor, you look at these opportunities or you look at these changes as opportunities. It does appear that we're in some sort of liquidation cycle, whether it's hedge funds degrossing or it's retail investors selling their, S&P 500 ETF from Vanguard or whatever the vehicle is. There's clearly systematic selling all across the board. There's nowhere to hide in this market. And so you sit there and say to yourself, well, if I'm an investor and I have a 3 to 5 to 10 year horizon for the things I want to own, are these dislocations giving me opportunities or is there something I should be really afraid of? Frankly, it is scary, but you have to stay clear-headed and you have to think about the long game here. And so when I hear this story about this momentum ETF, moving out of, selling out of Microsoft, I think to myself, maybe we're getting closer to the bottom on the tech wreck, than not. That's the first thought that comes to my mind.
It's a fair point to raise. And by the way, it's good to talk to you, Larry, and I know we'll talk to you again soon. I appreciate you being here on a painful day, certainly for you and many other investors who have big holdings in these stocks.